Hello viewers, welcome to our channel Stock Mantra. This week was all about the Fed decision and some earnings, notably from the bellwether stock Apple. The Federal Reserve decided to hike interest rate again by another 25 basis points and didn't clarify that they're at the end of the hiking cycle. They left it open until the June meeting. That seemed to hit the readers a little bit as market was sliding on Wednesday afternoon and Thursday. But it came roaring back on the heels of earnings from Apple, which increased the dividend and also announced a $90 billion buyback plan. The market saw the VIX jump a little this week, but the name exposure index went up to 70 again from 50 last week. We were wrong to say it will go toward 40. As you can see, this index is on an uptrend, having higher lows. It was 20 in October, then 40 in mid-March and 50 last week. Just as last year, it was on a downtrend making lower lows. Uptrend making higher lows this time. The investor fear index, greed index is still greedy. This needs to go to fear level before the market can go up. Like this, it should come from greed to fear. Now coming back to more technical analysis, you would first look at SPY. As you can see, there is an upward sloping trend line from October until now. Seems like it will go near it again. If it breaks that level around 3900, there is a support around 3800, the March low. At this point, would you like to point out that the market rallied for almost 1 month since January? Then it sold off until mid-March. From that point, it again rallied for 1 month to mid-April. It is reasonable to assume that it will again come down probably up to end of May before it starts to rally again. But there are warning signs. The SPY did not make a new high in mid-April. The high in April was well below the high from the end of January. Also, a lot of stocks are not participating in this rally. All the money flowing to big names such as Apple, Microsoft, Nvidia, etc. This kind of narrow breadth is definitely a concern to keep in mind. On the other hand, the technology stocks QQQ is showing more strength. On March 31st, it went above the January high, and since then it is consolidating in a tight range. We also feel now it may move lower to the trend line support. Now coming back to individual stocks, our first candidate is Apple, which shot up on Friday after it announced the earnings on Thursday after hours. Just like the market, I think it will come back down and probably touch the 20-day moving average around 165. Then comes Microsoft, which is also up on the heels of Apple's earnings, its toughest competitor. It is showing amazing strength trading in such a tight range. We feel it will consolidate at this level, then it will go up when the market starts rallying again. Now coming back to our most favorite stock, Nvidia. This also was up on Friday. It is so strong, rarely moving below the 20-day moving average, something to keep an eye on. Our next stock is AMD, which crashed on Wednesday on weak guidance, then quickly recovered on Thursday on some good news of deals with Microsoft. We feel it will probably come down back again to the early February low around 75. Our next stock is Tesla, which is not doing very well and trading below all key moving averages. With the market strength, it was able to come up to the 20-day moving average. Now we feel it will resume to the downside and may go to as low as 100. In terms of hot stocks, this week's candidate is Shopify, which went up 25% on Thursday and then again 12% on Friday. Now it is probably going to consolidate for a while. It is worth buying when it pulls back and starts going up again. Recently, the medical stocks are doing amazingly well. As for example, Eli Lilly, which has gone parabolic since end of March and has gone up almost 50%. It announced a new drug to slow down Alzheimer's disease. Now we have to wait and see how it consolidates. Another stock that is acting well is TG Therapeutics. It has gone up 50% almost in a week. Now you wait and watch as well as well on this one and watch how well it consolidates and then consider buying. At the end, we would like to thank you for listening and wish you good luck in trading next week. If you like this presentation, please give it a thumbs up and subscribe to the channel and put comments. Also, don't forget to share it with your family and friends. Please read the disclaimer before you make any trading or investing decision. This market commentary is provided free of charge with the hope that it will be useful. It is for education purposes only and does not address any individual's trading or investing goals. We make no guarantee as to the accuracy and validity of the data we present. You have to do your own research to make a decision in the market. This is the end of this week's stock market commentary. Thank you.